first and foremost, what is the Employee Retention Credit? The CARES Act of 2020 provided $2 trillion in measures to offset the impact of COVID-19, which included the Employee Retention Credit. Many of you are not aware of what this credit was because you had to choose between this tax credit and the PPP program. The Employee Retention Credit is a fully refundable tax credit that incentivizes employers to retain their staff during the coronavirus pandemic by providing specific tax relief. Everybody muted, there's a lot of feedback. Please mute all attendees. Okay, it's just the environment. Okay, I apologize. It's probably the environment, my headset picking it up. So who's eligible for the Employee Retention Credit? So businesses that retain their workforce and whose revenues are significantly impacted by the COVID-19 national emergency may qualify for a refundable tax credit of up to $5,000 per employee. Alex, can you move that? Alex, can you move that? Close it off a little bit for me. In 2020, it was worth $5,000 per employee. In 2021, it was actually worth up to $14,000, and there were some major changes that made this possible. So first, I want to talk a little bit about the CARES Act of 2020, which is what got us all that original PPP and the Employee Retention Credit. So based on the CARES Act, if your operations were fully or partially suspended as a result of a government order, you would qualify. So many of the businesses that are local to Massachusetts, I know that Charlie Baker had closed down quite a bit of businesses or reduced capacity or even limited businesses hours, all of which I think are worth considering for a partial government shutdown. So the other way that you can qualify outside of a full or partial government shutdown would be a 50% reduction in quarterly receipts compared to that same quarter in 2019. So that's a pretty hefty reduction. I know that a lot of you guys saw that type of a reduction in 2020 in second quarter. If you have less than 100 full-time employees, the tax credit is for wages paid to all employees. However, if you had more than 100 full-time employees, the tax credit is only for wages that were paid to employees who are being paid but not working. Now, the way that they qualify full-time employees for this calculation is actually different than the Affordable Care Act or other measures. This is actually based on people that were working on average more than 30 hours. It was not a full-time equivalent concept where part-timers' hours were also being considered. Like 2 part-timers do not make a full-timer using this math. We now have what's called the Consolidated Appropriations Act of 2021. Employers are eligible if their business operations were fully or partially suspended as a result of a government order. So again, if you were in event space, restaurants, retail, a gym that was forced to close at certain times, I think that may qualify. Or if you experienced only a 20% reduction in quarterly receipts compared to the same quarter in 2019. So we're now in first quarter. So if you look at first quarter of 2021 and compared to first quarter of 2019, are you down 20%? If so, you could qualify on the gross receipts test. They also greatly increased the number of full-time employees that you had to have in order to have the credit change. If you have under 500 full-time employees, this qualifies for all wages. So that's huge. How do you calculate the employee count? So to calculate whether the company had over or under 100 or 500 employees, depending on the year you're seeking the credit, you will take an average of all 12 months in 2019. So you're going to determine the number of employees in each month that worked at least an average of 30 or more hours per week. That tells you how many full-time bodies you had in that month. You then want to average out that number across 12 months. So add each month's number up, divide by 12. That will tell you the average number of employees. And if it was over 100 for a 2020 tax credit, then you can only seek the credit on employees that you paid to not go to work. Or in 2021, it was if they were over 500 employees. So it's only provided for wages for employees not providing service. The average number is less than 100 in 2020 or less than 500. Then the qualified wages include all wages paid to employees, both those providing service and those not providing service. How much can you get from the employee retention credit? So this is a big deal, guys. And this is something that I think a lot of people are sleeping on. In the Consolidated Appropriations Act, they actually made it available to use in conjunction with your PPP. So this is a huge upgrade. Now, when we're comparing the two acts, the CARES Act and the Consolidated Appropriations Act, the time period for 2020, the employee retention credit went into effect on March 12th, and it ended on the 1st of this year. So I would say that if you got a PPP, you cannot double dip. So you can't be seeking forgiveness for wages that were already paid for through your PPP and have been forgiven. So if you're using wages to seek forgiveness through the PPP, those are ineligible. Also, you can't be seeking Family First Coronavirus Response wages. So if people got COVID pay, that also has to be taken into consideration when you're applying for credit. The period began on March 12th, so many of you didn't get a PPP until mid-April, late April. So from March 12th until your covered period or alternate covered period on your PPP is a window that you could potentially be seeking this credit. Many people utilize their credit in only 8 weeks. Some people use the full 24 weeks, but I think a lot of you were done using your credit probably by the mid to end of October. So there's another window to look at if you had a PPP from the end of October, the end of your forgiven period, all the way to the beginning of this year for wages that could be eligible. Well, how was it calculated? It was 50% of qualified wages paid to an employee plus the cost to continue health benefits, right? The annual cap, the annual cap was $5,000 per employee, and the way it was calculated is you look at all of the wages within those windows, and it's 50% of them. So it's a $5,000 per employee. So let's say there was $4,500, but you paid $500 to continue their health insurance. That would get you to $5,000. You cannot get more than $5,000 in 2020 per employee, but that's still a pretty great credit. If you have 10 people that would qualify for this and they all max it out, you're looking at about 50 grand. If you had 98, you might be looking at quite a bit more. The Consolidated Appropriations Act is really what made it possible to use this in tandem with your PPP. So they had said really right around the end of December that decision was made. And going forward in 2021, the credit got huge. The new credit is available from January 1st to June 30th. So you can only capitalize on this for up to 6 months. However, it is no longer 50% of wages on an annual basis up to a $10,000 max. It is now 70% of wages per quarter. The cap is $7,000 per employee per quarter. So if an employee in first quarter makes $10,000 and they're eligible for this credit, you could see a refundable tax credit of $7 grand per body. So timing this credit in conjunction with your PPP is crucial and a very strategic play. There are a lot of factors to consider because if you're on a biweekly payroll, you may want to push off accepting a second round of PPP because then you can use what's called your alternate covered period for forgiveness, thus squeezing in a couple of extra weeks that are going to be 70% reimbursable depending on the wages that you pay. For now, it's only applicable to Q1 and Q2. We don't know if we'll see an extension, possible, but there's no indication that that is coming. Limitations of the employee retention credit. So you cannot use the same wages for both the employee retention credit as well as the PPP. You cannot take the work opportunity tax credits for the same wages as you are for the ERC, so there's no double dipping there. And you cannot take EFMLA or EPSLA payroll credits for the same wages, no double dipping. Those both talk about the Family First Coronavirus Response Act pay, where people got up to 80 hours to deal if they felt like symptoms or needed to get tested for COVID, or if they had to miss like up to 12 weeks to help remote learning for their kids. There are several examples of how that pay could be used. But for companies that had fewer than 500 employees, if you categorize that pay the right way, you would actually receive a reimbursement or an offset of your federal tax liability to realize some of that in real time. So if you're getting credited for that time, you just have to make sure that you're omitting it from your request for the credit. There's a lot of strategy that goes into this credit. There's a lot of moving parts and quite a bit to consider. So EF cost recovery gave us a great example of an employee retention credit for a 10-location quick serve restaurant. And what I find the most interesting about this story is they had 210 employees in 2019, but only 45 people were full-time. So they actually did fall under the 100. They had over 210 employees, but they really only had 45 full-time people. They were spending about $354,000 a month on payroll. The PPP loan that they got was just under $900,000, and their current monthly payroll is about $140K a month as they're recovering. Well, wouldn't you know it, what they got forgiven for was only $280,000. And I think what's so interesting about that is when we look at what they would have gotten had they done the employee retention credit the original way that it was written, they actually would have gotten $420,000. So it would have been a better play if they had to choose, but because of the update in late December, they were able to use both of these programs, and it really is going to save their business. So I think it's a great thing to consider, but something that you need to run a study on in order to make sure that you are not double dipping, that you are maximizing your credits. For those of you that have not yet gone for the forgiveness on your original PPP, you get to put a lot more thought into how you do it. If you just do 100% of your forgiveness and you put all of that on payroll because you knew that now there's 24 weeks, it's so much easier, you might be doing yourself a disservice because now you're disallowing yourself from some wages. And unfortunately, you cannot go back and redo your forgiveness as far as it stands right now. But because the SBA allowed for you to do up to a 60-40 split between payroll and other covered expenses or other eligible expenses, you really want to try to get to as close to that split as is possible or practical. So if you can shorten the time that you are using payroll forgiveness, that makes more wages eligible for this credit. The benefits of working with both myself and EF Cost Recovery are that we can help you to evaluate and determine client eligibility for benefits and credits pursuant to the COVID Act. We can help you determine and calculate the available credits. We can provide the reporting of the tax credits, including year-end calculations and supporting documentation to your tax professionals. We can provide no cost, so this is EF Cost Recovery, they provide no cost audit defense in the event that there are any claims identified by EF Cost Recovery to be reviewed by the IRS for an audit or state taxing authority. So anybody that has a CPA that handles their taxes, if you claim this credit after working with a company like EF Cost Recovery, what they will do is they'll provide audit support to give documentation, reasoning that you chose to take advantage of the credit, the reason that you selected the wages that you did. And I think that that's a tremendous benefit and will empower many people to take advantage of this credit. So I do appreciate everybody's time. I know that was super fast. I am going to pivot over to Q&A, which ends up being typically a fair portion of this. If anybody has anything else to do, by all means, I appreciate you coming, but I will be answering a few questions. It looks like Ram just sent me like 10 questions, and I feel like he's having a conversation. So what are my options? I do not know. Ram, if you could put a question in just a single coherent thought, I would do my best to answer you, but I have got 12 separate lines from here. For the time period credit from March 12th before our PPP kicked in, is that based on when the pay was earned or when the pay was paid, or hopefully both? So it's really based on like what you're seeking forgiveness on. So when the wages are paid, when you're going through your forgiveness, you're going to say that certain pay periods and certain check dates were earmarked. When those wages were paid, that's when you got credit on it for your forgiveness. So any wages that you have included on the forgiveness consideration for your PPP loan are off limits. If, for example, you haven't yet done your forgiveness, you may want to consider using something called the alternate covered period, which begins on the first day of the pay period following when you received your PPP loan. But great question. I appreciate that, anonymous attendee. Next question is Glenn. How do you figure out which wages to apply to ERC to above and beyond the PPP loan. Example, your PPP loan was $100,000 and you have 10 employees. Can you apply all the PPP forgiveness money to the highest paid wages, leaving employees with lower wages alone? This way, the higher paid employees have 10K left to apply to the ERC. Lower paid wages and lower paid employees still have wages too, or do you have to apply the PPP forgiveness portion to every employee at some rate per week or per month? I just think that as long as you're not double dipping, so as long as the way that you're doing your forgiveness, you're not seeking forgiveness on the same wages that you're claiming the ERC on, you can do it in any way, but you really do need to make sure that you're consulting with your tax professional, and you can work with EF Cost Recovery, who does a really great job of running studies. Questions like that are exactly why I recommend people consider partnering up with somebody that's going to consult, bill you for the advice, make sure that you're getting audit support and that you feel more firm in your decision making. And if anybody at the end of this does want an introduction to Adam at EF Cost Recovery, we will have you just send an email to service@brabopayroll.com and we'll arrange a meeting. I will also send a follow-up email just reminding you that it's easy enough to schedule a free consultation with them. But Glenn, really great question. Shows that you're thinking about this. So Ken is asking if the slides will be made available for reference. Short answer is no, but if you go to our YouTube channel, you can see a couple replays of the same webinar that we've all done together. There is one that was put up recently, and you can watch it at whichever speed makes you happy. But I don't want to make my competitors' lives easy by giving them my deck, so no. My entity received P1 in May 2020, used it for 24 weeks as of 10/20/2020. The whole P1 was forgiven for 24 weeks. In fact, the total gross salary used for 24 weeks is double of P1. How does ERC calculate for Q4 2020? Is the gross salary from 10/1 to 10/20 excluded from those? Hang, I would just say that you have to disallow any wages that you use for your forgiveness. I would say that when you were done seeking your forgiveness on 10/20, I think when you look at it, many people are like, hey, I have a ton of payroll, so I'm just going to do my forgiveness with 100% payroll. I'm going to ignore my mortgage expense, my interest on business expenses, utilities, transportation, other benefit costs. Like, you had a lot of other things that you could have brought into the PPP forgiveness. And the more of those other things that you brought in, the less payroll you needed. So you cannot, I can't tell you for that specific example. If you would like a consultation, I recommend you set one up. But I would say that you cannot seek forgiveness for some wages and then also apply for the credit. Great question coming up right here. So Beth, are S-Corp owners eligible? Yes, my interpretation is that the owner of the S-Corp is eligible. There's a debate on whether family members are allowed or disallowed. I would tell you that in general, I think EF Cost Recovery, when they run studies, has a reason for evaluating whether or not family members are included. But the way it's written does make it seem like family members are excluded. However, I do believe the owners that are paid by a W-2 that own an S-Corp are eligible for their wages to this credit. Okay. Jay, our salon employs 11 people. When we were able to reopen, Pennsylvania mandated salons to open at 50% occupancy, which is still the requirement today. Does that qualify us for the ERTC in this quarter, even though we don't meet the 20% reduction? I think so, Jay. I feel like a full or partial government shutdown certainly would say that if you are being limited in how you're allowed to operate, I would argue that that is a partial government shutdown. But I would really recommend that you set up a consult and you work with EF Cost Recovery to generate your credit and help you to apply for it so that you can feel better about it and have some documentation around why you chose to go for which wages. Great question coming up. How do you get the money back from the government? So there's really two different ways, but really it goes through the 941. So for current quarter, you can make an adjustment with your payroll company to maybe have them withhold less. You can also seek an advance of wages or an advance of credit not yet earned. So maybe you're not doing the second round of PPP and you know you're going to be getting the credit from now until the end of June. You can fill out something called the Form 7200 in order to get those wages. For any wages that you're looking for in 2020, you would have to amend each quarter for the eligible wages. So you would have to do a amendment to your Form 941. And there's a couple different ways that you can request it. You can either request it as a refund or you can have it applied to future quarters. I hope that answers your question. Okay, so if loan forgiveness is received in 2020 using 24-week payroll but needed was only 9 weeks, can excess wages be used for ERC? Yeah, you just have to look at which wages they use to forgive the loan. So you use certain wages and certain other expenses to go for the forgiveness. As long as we're not redundant in that process, you're going to be okay. This is going to matter if you get audited. Is it possible that you do this and nobody ever looks? For sure. It can totally happen that way. But if you get audited and they say, well, it looks like you used 24 weeks of payroll for forgiveness, you didn't send your bank any mortgage statements or any other bills, you just send them 24 weeks of payroll, they may disallow that. Yeah, so David's asking, if the IRS rejects Form 7200 for fourth quarter 2020, what's the next step? Amending the fourth quarter 940. 940 is an annual form, but yes, amending the fourth quarter, 941 would be a step, but you really would want to amend each quarter in which you had eligible wages for the ERC. Form 7200 is to request an advance. So you can't request an advance in the past, right? So Form 7200 is asking for future credits, not what's already taken place. I hope that answers your question, David. Thanks for asking. Shireen, yeah, I actually have a copy of this same webinar on my YouTube channel. So if you just go to YouTube and look up Brabo Payroll, you'll see quite a bit of content that we put out around the CARES Act. We talk a good amount about PPP and ERC and all things COVID relief, along with a couple payroll tips. But check us out on YouTube. Brabo Payroll is the channel. Next question from Dan. Does the Consolidated Appropriations Act of 2021, does it have a comparison period to determine the reduction of income? Yes, it actually says, does it compare to the first quarter of 2020 if the credit is taken in 2021? I believe it's looking at 2019. I think that there are a few exceptions to that rule. I would work with your tax professional, or I can make an introduction to EF cost recovery. But in general, I know that you can look at 2019. But another thing to consider, Dan, is whether or not you were impacted by a full or partial government shutdown. We're finding quite a bit of people qualifying under that metric. Another thing to consider is, how does the credit end? Once you come over 80% of your gross receipts, if that's how you're qualifying, then it will end on the quarter following that. If you qualify by full or partial government shutdown, it ends when the full or partial government shutdown ends at the close of that quarter. Can an S corporation sole owner, no other employees, claim the ERTC on their own wages? I believe so, Mark. I think that is a valid thing to do, as long as you consistently paid yourself a W-2 and consistently take pay. I do not see any reason that it would be disallowed. I would work with your tax professional as you pay them for their tax advice, but my gut says yes. Carla. So Carla is saying, if we haven't applied for forgiveness yet, this would be the perfect time to apply for the ERTC, and this has to be done while I'm filing my tax return. This only applies to full-time employees working 30 hours or more. So Carla, depending on the size of your company, if you have below 100 full-time employees, it actually applies to all employees, all wages up to $10,000 in wages for 2020 and up to $10,000 per quarter in 2021. This is absolutely, you are in a pristine position to strategically look at your PPP forgiveness. EF cost recovery will help you to evaluate how to apply for the forgiveness so that you don't leave any money on the table. You're in a good spot, Carla. Please get in touch with my office. Shoot us an email to service@brabopayroll.com. I'll get you linked up with a meeting, but you're in as good of a spot as you could be with that. Congrats. What are the alternate gross receipts tests? For example, the business didn't start until second quarter 2019. I don't know the answer to that right off the top of my head. I think it's the prior quarter, but I don't know that quickly off the top of my head. My gut says that if you started in second quarter of 2019 and you wanted to look at first quarter as an example, you could look at the quarter before that. I can't be quoted on it. Doing my best to give you some type of an answer, but I can tell you after the consult with Adam. Are there any credits for actually adding an employee last year? I hired an employee that was furloughed from another company. Wages are wages. So if the employee is eligible to have wages, then you are good. Yes, you would get a credit for hiring a new employee if they had eligible wages. Carla, so can you provide me info for someone on your team to partner up with? Absolutely, I'd be happy to do so. I'm going to introduce you to Adam. Thanks for asking. Thanks for participating. I'm having trouble getting, so this is Carrie. I'm having trouble getting clarification on how to report the ERC on a 1120F and how it flows to do an individual return. On one reference, it says to reduce wages by the credit amount. On another, it says to be reported on page 13, other credits using code P, which flows to the individual as an additional credit, which it's not. Yeah, I believe it's done on the 940, the 941. So where you're paying your payroll taxes, you either request a refund in that way on the 941, or you ask for them to reduce your liability going forward. I don't believe it's done on an 1120F. It doesn't mean that I'm right or wrong. I just am not familiar with that method. Sorry, I couldn't be more helpful. That said, I have a lot of single member S Corp owners. Yeah, it's a good benefit to look at for a single member S Corp owner for sure. All right, Carla, I'll get you that intro. Kamal, thank you for this webinar. We are waiting for our forgiveness amount, but certainly can use payroll outside of the PPP payroll. Is there a deadline for the retroactively amending our filings and claiming the 2020 ERC? It's actually a 3-year look back. So you can amend your returns for up to 3 years, as far as I understand it. But there's no time like the present. I think we're still living through the pandemic. A lot of people are concerned about cash flow. But come on, to be pretty direct here, I would say it's a 3-year look back, similar to other credits. Okay, RAM is back. 2021 for fourth quarter. They sent a letter saying, I already filed 941 and resend the 7,200 again. I sent it again, still waiting from IRS. What are my options? Do I need to amend 941 or with 7,200, can they send me a check? So in order to claim the credit on closed quarters, you need to amend your 941 is my understanding, Ram. Okay. Next question from Ram. This question is about 2020 quarters. I sent 7,200 to IRS on January 3rd. Fourth quarter, they sent a letter saying I already filed 941. Yep, so I just answered that question. Hang, does entity have to apply for forgiveness of P1 or P2 before the application of the ERC? I would say no, but I do think that going through the forgiveness process and knowing what you're fully forgiven for would give you more confidence in applying for wages that you are certain you will not need for PPP forgiveness. My personal preference is really to do PPP forgiveness strategically, and then once that forgiveness has been granted, then I think that you should take advantage of the ERC. That's my personal belief. Thank you, Beth. Next question is from Glenn. Will EF cost recovery know the answer to the question of how to subtract the PPP forgiven money to wages paid to determine qualified wages that I previously asked? Well, Glenn, I can tell you that there's only one way to find out. I would tell you that you can set up a absolutely no cost consultation, run it by them, see if they would be a good fit to partner with. Worst case, you waste 20 minutes of your time, you don't get the answer you need. Best case, they help you crush the ERC and you make a bunch of money and life is good. So I would recommend that you send an email to service@Brabo Payroll so I can get you set up with a meeting with Adam and you can ask your question directly to him. Okay, so we have an anonymous attendee. We didn't know about the FFCRA until now, but paid a few employees vacation time while they were out in quarantine last year. Is it possible to go back and change that pay to FFCRA credit, or is it too late? I think you could amend that. I'm really not super sure, but I have a feeling that you could make up payroll amendments in order to capitalize on that if you're unaware. I apologize for not having a definitive answer on that topic, but I think that if you made some payroll amendments, that may work. What are the forms used for amending 941, 2020, and then for a refund? I think it's called the 941X, Lori. Thanks for the question. I believe it's 941X. Shireen, so the ERC is available for payroll and other expenses that exceed the PPP loan and expenses used for the same purpose, right? Not a double dipping. The ERC is really only used for two things: the cost of continuing health coverage, so the employer piece of health insurance, as well as wages, those two things. So you can't use rent or mortgage interest or transportation or utility bills. Those are the things that are only covered by the PPP, which is crucial that when you're seeking your forgiveness, that you're taking those expenses and putting them on the PPP where it can be forgiven so that you can have more payroll or wages to be used for the employee retention credit. Sorry to clarify, PPP loan was received was $60K, but payroll for 24 weeks was $240K, but on the loan forgiveness application, $240K was mentioned. I'm not sure. You really have to talk to the bank about what they forgave you for. Carly emailed us, looking forward to working together. If a business started in Q3 2020, can you still be eligible for the ERC? No. I believe when you had to start was by February 15th, is my understanding. February 15th, 2020, or you really got not much help. If you amended 941 from 2020 for the ERC and received the refund in 2021, you still have to amend your 2020 S Corp return, or you just reduce your payroll tax expense in 2021. CPA question, I apologize, I'm not that guy for you. I would really just talk to the CPA about how they want to handle that. If you've already done your 2020 tax return and we're in February, good on you, Mark. Way to get after it, but I'm not sure. Sorry. Lori, we received PPP1 and 100% of forgiveness on PPP1 as well. I need to amend 941 to request a refund of ERC funds outside of PPP funds. How do I complete amend that and ask for a refund? If you work with the cost recovery, they can help you do all the paperwork required. Otherwise, you have to work with your payroll company. You'll have to calculate the credit per employee and do an amendment for each quarter. Each quarter that the wages were earned in. So you may have to amend like up to 3 quarters, second, third, fourth. This year you don't have to amend. You could just make like a journal entry or a payroll run to like get caught up. Is ERC, Richard, is ERC eligible for the wage paid only during the shutdown period or in a quarter? It's for wages paid during a quarter where you qualify either by the gross receipts test or the full or partial government shutdown. So any quarters that you qualify in, you do qualify for that entire quarter, but then you want to take all of the wages in that quarter. You want to back out wages that were forgiven by PPP. You want to back out anybody that you were seeking work opportunity tax credits on. You want to back out anybody that was getting paid for FFCRA. That remaining amount per employee is what you would want to seek the employee retention credit on. If that makes sense. In a forgiveness application, client mentioned 24-week payroll, but for loan forgiveness, only 10 weeks needed. Can you use excess wages for ERC? I think you can answer the same question as many times as you want. I think you have a sticky situation. And I recommend that you work with your bank to find out what weeks they use for your forgiveness. So in an ideal world, you didn't do it that way. In an ideal world, you would have done like 5 weeks of payroll and then provided receipts for things like your mortgage or your rent. But where we're now like looking at it after the fact, I really recommend that you work with the tax team to make sure that you feel confident in how you seek your credit. Thanks a lot. Glenn, can we amend 941 Q4 2020 at this point to claim the credit, or are we waiting on more guidance from the IRS? My current understanding, Glenn, and I apologize if I'm at all wrong, they did us dirty, Glenn. When they announced this at the end of December, they said that if you file a timely Q4 941, you can seek all 2020 wages on that single 941. However, where you're going back and you're going to be amending your 2020s, I believe you currently have to do each individual quarter for where the wages fell. I hope that answers your question. Ram is asking, can you help me in amending 941? We can help you to evaluate the credit, calculate the credit, and amend 941. Yes, sir. Yes, sir. Send an email to service@Brabo Payroll. We'll get you lined up with a meeting, and you can take a look at it. Jay, my staff is on a work share program. We're down to 8 questions. Anybody wants to hang, by all means, if you want to head out, you can. My staff is on a work share program at 40% or 60% time in Massachusetts, and I got the PPP2. We'll hit the 60% amount needed to get forgiven if we have staff increase their time and pay to 80 or 100% time, and payroll is more than the PPP2. Can we get the ERTC on the difference too? I hope this makes sense. Jay, congratulations on using the Massachusetts Workshare Program. What a fantastic way to help employees stay employed and to save your company. Congratulations on being a savvy owner there. But I would say you look like you need to have a long conversation with somebody about all the areas. You obviously cannot seek forgiveness or ERC on wages that were paid by the state of Massachusetts Unemployment Department. You need to strategically go through your forgiveness to make sure that you're doing it to the best of your ability to not leave money on the table. I think that you really ought to work with the tax team on calculating that. Matt, how do you qualify full-time employees in credit if they work full-time from January to September? They use PPP funds for 24 weeks within the time period, but there are some wages that were not covered, already given full forgiveness. Yeah, you just can't double dip. So you just can't double dip. Matt, I don't know if I answered your question well there, but you cannot use PPP forgiven funds and wages that you pay out for the employee retention credit at the same time. So if you, on your forgiveness application, have them considering those wages, and that is why you are forgiven, then they would be off limits. You cannot double dip. If you can do it without double dipping, it seems as though you could do it. If you question it, you might want to work with a team that's going to give you some audit support. In the event that you go through an audit, then you're going to have to explain why you did what you did, and that's when you're going to figure out if what you did was right or wrong. Last question. We are down to our very last question. Can you use the PPP and ERC for the same pay period as long as you don't double dip? This would be pay period when your PPP ran out. I personally, I would work with the cost recovery on something like that just because it's very splitting hairs. That's definitely something that they would help you to calculate. What I would say is, if at all possible, if you can bring any other expenses in. I know on PPP forgiveness, for example, like now cloud computing is a forgiven expense. Increased accounting costs is a forgiven expense. If you had to pay your bookkeeper more, your CPA more, you could bring some of those other expenses in. As long as you're maintaining a 60-40 ratio on payroll versus other expenses, then you're doing it right. I hope all of you guys got some value out of today's quick webinar. I love doing the Q&A. I do love providing value. If you're not working with a payroll company that gives you this level of guidance or this level of information, please give us a shot to tell you a little bit more about the services that we offer and why working with our team could be your very best decision ever. My name is Kevin Hennessy. Thanks so much.